Hello, trading is closed on the 5th of October 2023. As always, we'll start with our disclaimer, go over our calls and make some predictions. This is my trading plan for Friday, October 6th. Please remember, I can be wrong, trade at your own risk. I didn't have a chance to watch the market this afternoon. I was at the dentist and I'm still numb, so if my voice sounds a bit strange, that's the reason why, but let's see what the indicators have to say. Look for the pattern with the early low. This is it, and tomorrow should have the early low as well. We said if early weakness could be avoided, that the market could continue the rally. Well, early weakness wasn't avoided, and I said if that didn't happen, I didn't have a clear plan. Well, more often than not, I don't have a clear plan. We close essentially unchanged, and 0.13% is essentially unchanged, but saying I don't have a plan and saying we close unchanged isn't the same thing. As I've said before, one of these days I'll have the nerve to make unchanged the call, but I haven't been able to do that yet. Let's take a look at what happened during the day. This move up here, MEJT said was false, prices would be traced, said this drop was false, prices would be traced, that's already played out. Now it says this late rally is false, gives us a target of 42.33.19, and if we don't gap up smartly, that'll be the call. The catch is we could well gap up smartly. That's something we're not going to know until the open tomorrow. But we are approaching support, the 200-day moving average. We have support from the Fibonacci grid, and we have retail customers going overboard in their purchase of puts. So when we have good support and everybody in the grade on wash being very bearish, it's entirely possible, not required, but entirely possible we gap up and have a good rally here. If we don't gap up, the target's 42.33.19, but my rules won't let me go on the short side when the sentiment indicators are like this, and I don't mind missing a trade that wins as long as I don't take one that loses. That's just my personal philosophy. Well, Friday's pattern has the early low. It doesn't tell us where we open. There is a lower MEJT target, and if we don't get up smartly, the rules call for it to print. And the failure of today's normally bullish pattern to overtake the early high at the close is bearish as well. But, gapping and promptly overtaking today's high tomorrow would take all that negativity away. And such a gap is entirely possible as a non-farm payroll report comes out before the open. This tends to be a market mover. We're trading near support, although prices a bit lower can be justified without breaking it. Sentiment indicators continue to show retail customers are loading up on puts, and these folks are usually on the wrong side of the trade. I don't like to predict the response to major economic reports, but I continue to feel we're very close to a low here. We may well have seen it already. I mean, we have all the elements for a low. All we need to do is reverse, and that hasn't happened yet. We gap up, overtake these high, I think it could have legs, but if we don't, there is a lower target. Tomorrow has the early low. We'll wait to see what NFP says, and that's today's call.